what's going on, everyone? Hope everybody's had a good weekend so far. Here's our weekly update recap video, Halloween edition. Okay, so we had a big week last week. A lot of economic data came out. We had big tech earnings. We're going to break some of that down, and then a little bit of an outlook coming out this week with the federal rate decision and where we think the market's going to go. So let's go ahead and get into it. All right, so here's some of the economic data recap that came out this past week. We had consumer confidence come out way higher than expected, or lower, way lower than expected, sorry, at 102.5, where we really were expecting 106.5. That helped spark the market. We had durable goods come out lower than expected. Remember, bad news is good news is if it includes the economy wise. Now, if it's inflation, you want the lowest possible number you can get. So we had GDP come out that came out at 2.6%, where forecast was 2.4%. Do not get used to these big numbers because expect the fourth quarter to severely be lower than this, especially going into next year with a possible recession coming out. We had continuing jobless claims are still trending higher. This is what you want. You want the labor market to ease. You want the economy to ease, because the quicker the economy eases and the faster that inflation goes down, the faster that the Federal Reserve can pivot. And I'll get into what happens when a pivot comes. But we had also had the initial jobless claims came out lower than expected, but we're still slowly trending in the right direction. We're still seeing that strong labor market, but we are trending in the right direction. Friday sent the market absolutely skyrocketing. Core PCE price index year over year came in less than expected. Now, this number was severely way too high, but it was still below forecast. So as of Friday, it was bullish as of Friday. PCE price index year over year as expected. And then we had the Michigan consumer sentiment came out pretty much just as expected, but we were already melting up at that point. We had a lot of companies earnings last week and everything coming out saying they're going to have buybacks, so it was helping up with the melting up this on Friday. We could see a possible pullback. Now let's some of the economic data coming out this week. All right, so Monday we have the ISM manufacturing PMI. Expect this number to be lower than expected, just because manufacturing right now has been terrible for the last 4 or 5 months. And then, so that could send us up on Monday. But expect on Tuesday, we have the federal rate interest rate decision. Forecast is 4%. The previous was 3.25%. So we're expecting a 75 base point rate hike. But we all had a little bit of news this past week that there could be possible Fed pivot language coming out, and I'll discuss that on in the next couple of slides. But just be expected for this. So we could very well see a lot of volume coming in, a lot of high volatility on that day. And then on the 3rd, we have the S&P PMI numbers coming out, the final numbers coming out, and then we have the ISM non-manufacturing PMI coming out. And then, of course, on the 4th, we have unemployment rate and non-farm payrolls. These numbers, you want non-farm payrolls down, and you want unemployment rate up. This just means that the labor market is easing. This is what you want if you're betting on the stock, if you want the stock market to go back up. Now, let's talk a little bit about this big tech earnings that we had this past week. So we've seen tech stocks absolutely get rocked, especially the big ones. So how the mighty have fallen, right? I mean, Google had a double miss on earnings per share and revenue. They cut future guidance. Microsoft had a double beat on earnings per share and revenue, but they cut future forecast. Amazon, they beat earnings per share, but missed a little bit on the revenue. Their cloud revenue missed. They cut future forecast. But lo and behold, Apple, double beat earnings per share. They had weaker iPhone revenue along with iPad revenue, but here's the main 2 quotes we're expecting for this next earnings report for Apple. Q1 revenue growth will decelerate compared to September's growth. Apple, Mac revenue will decline substantially in holiday quarter. We've seen yields absolutely put a hamper down on tech stocks, which a lot of the reason why you think the Federal Reserve might pivot this week. We're seeing the big companies fall, and this just kind of pushes back on the fact that we could see a Fed pivot this week, which I will go ahead and I will get into on the next slide. But Apple probably was one of the ones that actually really surprised me. I had to put on Apple. It was only for profit, but man, they actually really did surprise me. They came out there and actually really beat earnings a whole lot better than I thought they would with high yields. You have supply chain issues. They've been having a lot of problems with AMD and their chip and everything. So, all right. So, what do we expect from the Fed interest rate decision? All right. So, we've heard this past week. If you didn't hear it, there was a news reporter coming out and said that we could possibly hear a pivot language this week. Don't you dare count on it. All right. So, here is my main reason why. This week we had the pivot language news and everything come out. We had big tech earnings take a damper on. But here's the reason why. Inflation is still at a 40-year high, and the labor market is still way too strong, okay? This past week, we saw the stock market melt up. We saw bonds actually get a bid. They rose a lot, and we saw yields fall really hard. This eased the market. This eased the entire economy, and you don't have that risk as much anymore in the bond market. So now you have the possibility of the Federal Reserve coming in and having a hawkish standpoint yet again without risk to the bond market in general. Now, I'm not saying that it's not going to break, but I will say that it's giving the Federal Reserve the option to be able to come in here pretty hawkishly this next week, especially with how the market ran this past week. Now, if you don't know Tradie Ticks, they're a great platform to use, just mainly not just because of algo flow and stuff, and you can be able to see, but they also have dark pool levels and everything else. But here's the 3-day and the 5-day algo flow for the market. We saw this giant melt up here on Friday. We completely rose, just flew high. But here's the thing: if you look right here, algo flow has a history. The price will come up and it will hit that level of previous algo flow. It ran up, it hit that level. We could possibly see a little bit more bullishness here on Monday, depending on the data that comes out. But I am still expecting the market to I expect Jay Powell to come in on Tuesday and have a very hawkish stance. With inflation is still way too high, labor market's still very strong, with everything pointing to a recession on Q1 on this early next year. So, I mean, you see the stock market has come up really fast this past week, and you saw that algo flow rose a little bit, but it is not betting on this, and you've seen this. The bond market's been very easing. So we'll get into some technical analysis to kind of help with some support and resistance levels, but I'm really betting on this week that the Federal Reserve comes in a lot more hawkish than people are expecting. All right, so let's take a look at some technical. All right, so let's look a little bit at technical analysis here. Okay, so you see on the daily, we're starting to kind of cross this to the bullishness on the MACD. It's looking pretty good for bullish as technical analysis stands, but remember, technical analysis can always be trumped by news. Does not matter if you have support resistance levels at certain, they can be used as indicators for short term, but if you have news coming out, do not bet on technical analysis. Now, with that said, the TA setup is looking pretty bullish here. We have the VWAP starting to trying to cross. We have the stock RSI is oversold though. But it very well can just kind of sit up here at the top, just kind of like right here. But so we're starting to try to cross here on the daily here, right here on the bullishness. We have a gap fill to the top and bottom. Remember, midterms is coming out, and hate to get political in the stock market, but sadly, things really do kind of, certain midterm years and election years really do have an effect on the stock market in general. So looking at here at Apple, I mean, we broke out here on this daily on this daily bull flag that we've been trending down on the daily. So we had this original breakout, and then we started to try to come down here to retest that level, but caught a bid, and then earnings, of course, shot it straight up. So we could possibly come back and see some retest on some of these levels, but here's what I want to talk about right here. Okay, so here on the daily, VIX or the volatility index for the S&P 500 has been just crushed, just falling so hard. So I really think that we could come back and see some of these retest levels here in this next week if we do get a hawkish Jay Powell. Now here's the bond market. I mean, we blasted up a lot here on the 10-year, and as well on yields, we kind of eased a little bit, but just keep an eye on this because we've seen yields come back and really ease a little bit on this pressure on the bond market in general. So it may have just been a little bit enough for the Federal Reserve to come out for one more. I think we have one more hawkish Jay Powell before we start to kind of see a little bit of a pivot, depending, of course, on where inflation is now. Now we've seen inflation stay high because it's broad based, but the one thing I want to note is it's staying high. It's continually kind of rising, but it's not rising at the same pace as it used to be. So we could start to see a little bit of slowdown in inflation in this next couple of months. And if we do, I really do think that there's a lot of pressure going on right now in the stock market and the bond market in general that we could just see a little bit of a pivot coming from the Jay Powell. So here's the kind of TA setup. Just watch this level as we've been trending up on the daily on the S&P 500 as we could catch some support, but remember it is a bear flag forming, so we will break down eventually. So just keep an eye on that. If you like this video, don't forget to like and subscribe and share it with people so everybody in the community can kind of get it out. Thank everybody, all my followers and stuff, and just everybody have it continue.